Hello friends, in the series on the income tax cases, today we will discuss the case of Assistant Commissioner of Income Tax versus GRAVITA Metal Inc. This case has been reported in 105 ITR Tribunal, short notes 10. The matter has been decided by AMRITSAR ITAT and the date of the judgment is 15th June 2023. The main purpose of discussing this case is that the taxability of any item into the Income Tax Act depends upon whether it is taxable under the Income Tax Act. Meaning thereby that if the assessee has taken any item into its profit and loss account, then it does not mean that it will be taxable under the Income Tax Act until and unless it is specifically given in the Income Tax Act that it is taxable. If the assessee has made some entries into the books of accounts by mistake or by error, then it is not sufficient to tax that amount. The second thing is that in fiscal laws, it is the general understanding of law that you cannot insert the words into the act or you cannot take the words out of the act. In this case, the assessee was entitled to excise duty exemption of 36%, and the assessee received 36% excise duty exemption from the government. But the assessee also recognized the income of remaining 64% in the books. And the assessee treated the 100% excise duty exemption, 36% which is received by the assessee and 64% which was not received by the assessee, but recorded in the books of the assessee treated the whole amount as capital receipt and didn't take that amount into its taxable income. When the assessment was going on, the assessing officer said that there is one section 2, clause 24, clause 18, which talks about that these items should be included into the income of the assessee. What section 2, clause 24, clause 18 says that any subsidy, grant, cash incentive, duty drawback or waiver, reimbursement by whatever name called, received from the central government or the state government or any authority in cash or in kind is taxable. Although this clause also exempts two items. One is that if assessee receives any grant and the assessee has that grant has been received for purchasing a particular asset, then that grant will be reduced from the cost of that asset and that will not become the part of the income of the assessee. And the second thing is that if any society receives any grant for the purpose of its corpus fund, then it will not become the income of the society. This is the general rule. So, income tax officer, by taking the shelter of this section 2, clause 24, clause 18, taxed the excise duty exemption of 100% into the income of the assessee without going into the integrity that the assessee has not received 64% and it is just a book entry. When the matter came to the CIT appeal said that since the assessee is not entitled to receive 64%, so that portion should not be taxed. But the assessee was still contesting for the 36% also that it is a capital receipt, but the CIT appeal said that 36% will fall into the definition of section 2, clause 24, clause 18. Meaning thereby that the CIT appeal gave the relief of 64%, still taxing 36%. Both the assessee and the department went to the appeal. There were cross appeals. ITAT said that as far as 64% is concerned, there is no doubt it should not be taxed according to Article 265 and Section 4 of the Income Tax Act, because it is not the income of the assessee, it is not received, it is only a book entry. And as far as 36% was concerned, ITAT said that there is no word exemption in the definition of income under section 2 clause 24 clause 18. In that definition, the word subsidy is there, grant is there, cash incentive is there, duty drawback is there, reimbursement is there, but excise duty exemption is not there. Exemption word is not there, so you cannot import that word into that definition, and hence excise duty exemption which is received by the assessee to the extent of 36% is a capital receipt and it is not taxable. So the ITAT gave full relief to the assessee. At the end of this video, once again I am repeating the name of the case. The name of the case is Assistant Commissioner of Income Tax versus GRAVITA Metal Inc. This case has been reported in 105 ITR, Tribunal Short Notes 10. The matter has been decided by AMRITSAR ITAT and the date of the judgment is 15th June 2023. Thank you, friends.